Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. But before I continue, as a special request from one of the audience, I will show all the charts here as candlesticks at the very end. I'll start with euro against the dollar. A long-legged indecisive spinning top yesterday, especially the tongue on the top, which punched up through the congestion between 103.38 to 103.69, as well as the declining long-moving average, currently 104.13. The market almost reached up to the next overhead resistances, but shied away from testing the February and March 2017 lows at 104.92 and the upper time, currently 105.03, of the broken but seemingly still influential January to May 2021 bearish Andrews pitchfork. Despite this move higher, prices ended up closing only a little higher within the 103.38 to 103.69 congestion, right on the 103.49 congestion. This all highlighted yet again the two core patterns here. You can see them singled out with the relevant trend lines in blue to help visualize what is going on. We have a September to date ascending triangle, currently 98.49 to 99.52, and a September to date ascending wedge pattern, currently 98.49 to 101.73. Recently, both patterns had false breaks in both directions, which complicated things and compromised both patterns. However, both patterns repaired themselves, and last Friday saw a clear break above the upper trend line of the ascending wedge pattern to complement the earlier clear break above the ascending triangle. Looking above, we have congestion between 103.38 to 103.69, which I detailed earlier. So with all this action, let's now look topside and see what were and are the opportunities for these patterns. I previously listed possible targets for the ascending triangle of a primary target X in the 102.65 area and a secondary hard to reach target X1 in the 103.65 area. And for the ascending wedge pattern, a primary target X2 in the 105.35 area and a secondary harder to reach target X3 in the 107.65 area. Well, the primary target X for the ascending triangle was reached on Friday, and the harder to reach secondary target X1 was reached on Monday. I'll now retire these patterns and its targets as they have done all they can do. We now look to see if the targets X2 and X3 will now be achieved. Now, so far today, a push higher almost straight away, up and out of the congestion, and now just pushing up over the declining long-moving average. Cable, aka sterling against the US dollar. An immediate countering bullish engulfing pattern yesterday after the previous session's reactionary bearish harami. The market once again pushed up through the upper trend line, currently 117.87, of the recent ascending triangle, but shying away from testing the next overhead congestion, the May 2020 low at 120.73. Prices ended up closing on the lesser Fibonacci line at 118.59. All this was yet another move higher up and away from the upper flat trend line, currently at 115.05, as well as the declining medium moving average, currently 116.43, of the recent ascending triangle, as well as the fresh close back over the previously mentioned upper trend line of the recent ascending wedge pattern. Much as in euro-dollar, there are two core patterns here. I've highlighted the relevant trend lines in blue to help visualize what is going on. We have a late September to date ascending triangle, currently 1400 to 1505, and also a September to date ascending wedge pattern, currently 1400 to 117.87. Both patterns have been previously compromised and both have repaired themselves. Late last week, there was a break higher over the flat trend line of the ascending triangle, giving possible targets for this pattern on the upside of a primary target X in the 120.20 area and a secondary harder to reach target X1 in the 122.5 area. Yesterday, the market managed to reach the primary target X before pulling back. We'll now see if there is sufficient bullish incentive to reach target X1. Now, so far today, initially indecision around the lesser Fibonacci line at 118.59, but seemingly now the market is considering moving higher, though slowly. Euro sterling. A reactionary bearish black crow yesterday, almost but not quite a bearish engulfing pattern. The market closed just under the base of support, the rising short medium moving average, currently 87.25, and right on the nearby April 2021 high at 87.19. I'm reminded that last week the market had previously faltered ahead of testing the overhead 50% Fibonacci line of the March 2020 to March 2022 move at 88.51, which I suspect may have happened again this week. Further down, it is worth remembering we have the breached but still repaired, since repaired lower time, currently at 86.91, the bullish April to August Andrews pitchfork. Now, so far today, a reactionary move higher, looking like a bullish harami right now, but seemingly moving at least, well, it was moving at least towards a bullish double pattern. US dollar against the Indian rupee. A second bullish white soldier yesterday, but the market ended up as an indecisive, if slightly higher, indecisive spinning top. Prices pierced the overhead resistances of the recent 50% Fibonacci line at 81.13, as well as the rising short-medium moving average, currently 81.35, but halted ahead of testing the lesser Fibonacci line at 81.63, before closing back down just under the 50% Fibonacci line. I now need to discuss the larger scenario which I'd previously mentioned in my commentaries. So, I'd highlighted the September to early November ascending wedge pattern late 2 weeks ago. Prices then pushed down through the lower trend line, currently at 83.47. And the move lower since then has confirmed the pattern. Hence, we had a primary target X in the 80.90 zone and a secondary harder to reach target X1 in the 80.28 zone. Last Thursday, the market reached the primary target, but we've since seen the market being shy of testing the rising medium moving average below, currently at 80.52. Beyond the medium moving average, we have a gap dating from September between 80.06 to 80.18, which is significant. And then the August to date uptrend, currently at 79.93. Now, I should mention that this uptrend is part of a July to September ascending triangle pattern, which was successful back then, but which had left its upper trend line, currently at 80.02, in there as well. So with all this going on, I think it appropriate to retire target X as it has already been achieved. So far today, a slightly higher open, only ticks away from the 50% Fibonacci line at 81.13, and prices have powered up through the 50% Fibonacci line as well as the rising short-medium moving average, almost reaching the lesser Fibonacci line at 81.63, but again shying away from testing before dropping back down through the short-medium moving average and down now to the 50% Fibonacci line. I'm wondering whether there's going to be a shooting star pattern on this after all this. US dollar against the Brazilian real. A national holiday in Brazil yesterday, but my commentary still applies. We had an unusual dichotomy on Monday, an indecisive spinning top that was also a bullish harami, if only just, as opposed to the previous session, the Friday, which was an indecisive spinning top that was also a bearish harami, if only just. All this shows now not only the intraday indecision, but the interday indecision as well, after the earlier huge bullish opening long white Mariboso, which in its turn was a more than adequate follow-on to the even earlier bullish engulfing pattern. All this action pointed out one clear feature. The overhead breached upper time, currently at 5.36 3/4, of the July to late August bearish shift pitchfork, still has a significant influence in capping the market, especially on the closing basis. Interestingly, the 50% Fibonacci line below of the May 2020 to April 2022 move at 5.2737 does not look that good a support, though the other, slightly lower 50% Fibonacci line at 5.2276 of the March 2021 to April 2022 move does look a better support. I suspect this may be due to the conglomeration of moving averages nearby there, specifically the short moving average, currently at 5.2367, short medium moving average, currently 5.2367 also, and the medium moving average, currently at 5.2432. Additionally, I'm still minded of how the market last week almost set up for a possible monthly key reversal. I'll still keep this idea in my mind. US dollar against the Mexican peso. A very long-legged, indecisive doji cross yesterday, with a unique feature of making a fresh low with the tail, one that had not been seen since early March 2020. Overall, this current move lower all relates to the previously highlighted crossover combination of the broken upper time, currently 1959.59, of the March to July bearish Andrews pitchfork, and the middle time, currently 1975.44, of the still intact bearish shift pitchfork for the same move. The latest casualty had been the May 2022 low at 1940.70, which had been support, become resistance, then support again, and now resistance again. We have resistance now. Meanwhile, topside, we have resistance if on a closing basis from the pierce, but still influential 2021 low at 1953.63. So far today, a slightly higher open, a test up to the May 22 low before stalling and moving back down again, though not as far as, well, really not that far. It's looking like an indecisive spinning top right now. Thank you for listening. The short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.